Okay, so like imagine you're training for a marathon. You know,
Uh,
you've got that big day circled on your calendar, but then you suddenly hit peak fitness way sooner than you thought you would.
oh, wow.
Yeah. Do you stick to the plan or do you kind of rethink your whole approach? It's
Interesting.
kind of like that with Bitcoin, believe it or not.
Hmm.
And today we're going to do a deep dive into all this with Jigs.
Okay.
You know Jigs.
Yeah, I've heard of him.
He calls himself a Bitcoin professor, and he's going to help us understand how time is super important when it comes to investing in Bitcoin.
I'm really interested to hear how he applies that marathon analogy to Bitcoin.
Well, he brings in his own personal story too, which is really fascinating.
Yeah.
Jigs is very open about how he used daily affirmations to build confidence in his Bitcoin investing decisions.
Interesting.
He even shares a story about how all this success led to him having a falling out with some of his friends.
Oh, wow.
Yeah, they just couldn't wrap their heads around how much he was making.
Yeah, that makes sense.
Yeah, it just really highlights, the psychological side of investing.
Definitely fear and greed often drive how people behave, especially in a volatile market like Bitcoin.
Exactly. And what's so interesting is Jigs connects his past as a rugby fullback to his approach to Bitcoin investing.
How so?
Well, he talks about having to read the field and anticipating plays,
Right.
much like you have to understand Bitcoin cycles to know when to make the right moves.
Ah, so he's drawing a parallel between strategic thinking in rugby and the world of Bitcoin.
Yeah,
I can see how that translates.
Right.
In both cases, you need to recognize patterns, anticipate shifts, and act decisively.
And a key part of that is understanding these 4-year cycles in Bitcoin,
Right.
punctuated by something called a halving event.
Okay.
So every 4 years, the rate at which new Bitcoins are created gets cut in half.
Oh, I see.
And this built-in scarcity is like super crucial to Bitcoin's value over time.
Okay.
Fewer new coins entering the market means
It's fascinating how this halving mechanism is designed to control inflation and increase scarcity.
Yeah,
It's a fundamental difference between Bitcoin and traditional currencies.
absolutely. And it gets even more interesting here.
Okay.
Jigs noticed a correlation between the Bitcoin halving cycle and the U.S. election cycle. Both happen around April.
Wow.
Now, whether this is just a coincidence or if there's a real connection, who knows?
Yeah.
But it definitely adds another layer to think about.
Yeah, it really makes you wonder about the potential interplay between these broader economic and political cycles and how they might influence Bitcoin's price.
Right, and based on all this, Jigs suggests specific time windows that he thinks are optimal for buying and selling Bitcoin.
Okay.
So he calls the period 70 to 40 weeks before a halving event the buying zone.
So I have 70 to 40 weeks before the halving.
Well, he observed that Bitcoin tends to hit a low point in this window after reaching its previous all-time high.
Okay.
So it's like a dip in the market before the next big surge. He believes this could be a good time to accumulate Bitcoin at a lower price.
Yeah. Okay, that makes sense. If history repeats itself, buying low during that period could set you up for gains as the cycle progresses and we get closer to the halving event.
Exactly. And then he says 70 to 90 weeks after a halving is the selling zone.
Right.
This is when Bitcoin historically tends to peak in value. So theoretically, if you bought in that earlier buying zone, you'd be aiming to sell closer to the peak of the next cycle.
Right. So it's not just about buying low, it's also about taking profits and potentially avoiding a downturn.
Exactly. And Jigs emphasizes that these windows aren't just random guesses. They align with other market indicators and even investor psychology,
Oh.
which we'll dive deeper into in part 2 of our deep dive.
I'm curious to hear more about that.
But before we move on, there's one more fascinating detail.
Okay.
Jigs observed that Bitcoin tends to hit a peak around 35 months into its 4-year cycle. And guess what? That peak often falls right within that 70 to 90 week post-halving selling zone we just talked about.
That's interesting. It seems like there are a lot of factors converging around that 35-month mark,
Exactly.
potentially creating the ideal conditions for a price peak.
He even calls it the November 28th phenomenon, because historically Bitcoin has often reached all-time highs around that date.
Interesting.
But despite all this, Jigs offers some crucial advice.
Okay. What's
Just don't chase the market. Let it come to you. He cautions against making impulsive decisions, when you see a sudden price pump.
That's good advice for any investor.
Yeah, especially in a market as volatile as Bitcoin.
Yeah, for sure. Emotional decision-making can be very costly.
Totally. And speaking of avoiding those knee-jerk reactions, Jigs brings it back to that marathon analogy.
Yeah, okay.
Just like a runner adjusts their training based on when they hit peak fitness, a savvy Bitcoin investor needs to adapt their strategy based on how the market is moving.
Right. It's about recognizing that markets are dynamic
Yeah,
and adapting to changing conditions.
exactly. He calls it direction over speed, which I think is the perfect way to describe his approach.
Yeah, I like that.
But we've covered a lot in part 1.
Yeah, we have.
So let's take a pause here and pick up the conversation in part 2, where we'll delve deeper into investor psychology and explore what these time-based investing strategies could mean for you.
Sounds good. So you left us hanging with that idea of not chasing the market and the risks of buying before the halving.
Right. Okay. Yeah. Let's unpack that.
I'm ready to dive back into Jigs' strategies and how he includes investor psychology.
It might seem counterintuitive to buy before the halving when the price could drop further.
Yeah, it could.
But Jig says that's where understanding investor psychology is crucial.
Okay, I can see how fear and greed would come into play, especially with something as volatile as Bitcoin.
Exactly. When the market is booming, everyone gets caught up in the hype,
Right.
and they're afraid of missing out, so they might rush in and buy at inflated prices.
Yeah, driven by emotion rather than logic.
Exactly. It's that classic FOMO.
Yep, fear of missing out.
And then when the market dips, fear takes over,
Right.
and everyone panic sells.
Yeah, and they lock in those losses.
It becomes a self-fulfilling prophecy.
Yeah, fear drives the price down, which leads to more fear and more selling.
It's a vicious cycle.
Definitely. But if you understand these patterns and how they're connected to investor psychology,
Right.
you can avoid those emotional pitfalls and make more rational decisions.
Exactly. It's about having a plan and sticking to it,
Okay.
even when things get crazy.
Right.
Jigs talks about how this time-based approach helped him stay grounded during those ups and downs.
That's interesting. Instead of reacting emotionally to every price change, he's using these patterns as a framework for making decisions.
Yeah.
It's a more strategic, long-term view.
What's really cool about Jigs' approach is you don't need to be a chart expert or anything.
Right.
He says with some basic math, anyone can understand these cycles and potentially identify those buying and selling zones.
I like that it makes it accessible to everyone.
Exactly. It's not about getting rich quick or following some guru.
Right.
It's about having knowledge and a strategy.
Okay.
Remember that 35-month peak pattern?
Yeah.
Jigs points out something about data points.
Okay.
He says, with 3 data points, you start to see statistical significance.
So if that pattern happens again in the next cycle, that would be our 3rd data point,
Exactly.
giving it more predictive power.
If it happens again, it means it's probably not random.
Right. It suggests there's something causing it.
Yeah, some underlying force driving it.
So what could this mean for investors if it does hold true?
That's the million-dollar question, isn't it?
Yeah.
It's something we all have to watch and see.
Definitely.
But even if you're not actively trading Bitcoin, I think Jigs' ideas are really valuable.
Okay. How so?
They show us the importance of time in investing, recognizing those larger cycles, and having a strategy beyond just chasing the latest hot tip.
It's about seeing the bigger picture and avoiding those emotional traps we talked about.
Exactly. And it highlights the importance of patience and discipline.
Yeah.
It's not just about picking the right asset, it's about understanding the right moment.
It sounds like Jigs is advocating for a more thoughtful and measured approach.
Yes.
One that emphasizes research patience and a long-term perspective.
You got it. Now, before we wrap up part 2,
Okay.
Jigs leaves us with a final thought
Okay.
that I think sums up his whole philosophy.
I'm intrigued. Tell me more.
He reminds us that the next halving is expected in April 2024.
Right.
And based on his time windows, that puts the buying zone somewhere between August 2022 and May 2023. Now, that might seem odd to some people.
Yeah, you'd think the best time to buy is after the halving.
Right, when the price is supposed to go up.
Exactly.
But Jigs' analysis says different.
Okay.
He's looking at that period leading up to the halving.
Right.
Remember, this is when Bitcoin usually bottoms out.
After reaching its previous all-time high.
Exactly. So
Yeah.
it could be a chance to buy at a better price.
It's not about trying to time the market perfectly. It's about understanding how Bitcoin works.
And positioning yourself accordingly.
Yeah.
But Jigs makes it clear.
Okay.
These time windows are not a guaranteed get-rich-quick scheme.
Right.
He says you got to do your own research.
Okay.
Combine his insights with other market indicators.
Make informed decisions.
Exactly.
Right.
He also says you need to manage risk,
Of course.
only invest what you can afford to lose,
Right.
and be prepared for the market to move in unexpected ways.
That's crucial advice for any investor.
Yeah, I think one of the most valuable things we can learn from Jigs,
Okay.
even if we're not into Bitcoin,
Yeah.
is the importance of time in investing. Recognizing those cycles, being patient, having a strategy that's bigger than just chasing trends.
It's about being a more thoughtful investor,
Yes,
not just reacting to every little change.
exactly. It's the long game.
Right, like that marathon runner.
Pacing yourself.
Yeah, adapting to the terrain.
Remember Jigs' story about his friends doubting him?
Yeah, even his closest friends didn't believe in Bitcoin at first.
It makes you wonder if that 35-month peak pattern does repeat.
Right.
What will that tell us about the future of Bitcoin?
What will it mean for investors?
That's the question we all need to think about.
Yeah, as we watch this all play out.
Whether you're already into Bitcoin or just learning about it.
It's important to understand these cycles.
Yeah, and the forces at work.
To navigate the world of finance.
It's about staying informed, engaged, and learning.
Absolutely.
Thanks for joining us on this deep dive
Yeah, it's been fascinating.
into the world of Bitcoin and time.
Definitely.
Until next time, keep exploring
Keep asking questions.
and keep that marathon mindset.
As you navigate your own financial journey.
Yeah.